Amrita, we caught up yesterday. I was cooking, I'm walking around, and I'm asking you questions about, do the Houthi rebel attacks on the UAE matter this time? Because people say to me here, oh, why are you so worried, Manus? You know, it's happened many, many times over many, many years. Why would it matter to the oil market now? Tell me why.
I think this time the difference is that, well, it's on UAE targets rather than Saudi Arabia. So there is a bit of a difference. But the bigger issue is how tight the oil market is, right? Like you said, this has happened many, many times in the past. But the reason it hasn't mattered is back then, say, we've had either a lot of spare capacity or a lot of inventory, so generally a lot more buffers. Right now, the buffers are running really, really thin. I mean, demand's coming in far stronger than expected. Inventories are near record levels. And, you know, Q1, we're supposed to build. We're barely building going into a summer period where we always draw. So that's the problem right now with any geopolitical headlines, whether it affects oil production or not. And Saudi Arabia and UAE are the only two real holders of spare capacity. So any possibility that that spare capacity could come under pressure or an unplanned outage happens, of course the market's going to react.
Amrita, I want to get your sense of what the sweat level is. And the people you talk to, and you, of course, your contacts run deep in this energy and oil market, how fearful are folks out there?
I wouldn't say they're hugely fearful of an actual attack taking out oil production. I mean, even with upcake, we saw how quickly Saudi Arabia bounced back. So in general, the market remains quite sanguine about the GCC's ability to supply the market. But the market is extremely concerned about where are we going to find any kind of, say, inventories, or who else has spare capacity? Should there be an outage, not necessarily in the GCC, but let's say Libya or Nigeria? And that list is endless. And I think that's where the worry is quite deep across, you know, let's say hedge funds, just traders in general, because they are looking back to, say, 2011 when Libya happened, or even 2008 when oil prices went to 148. The parallels are being drawn right now, saying that, okay, we have very similar, if anything, tighter backdrops. So that doesn't leave much room for any margin of error.
So typically, we talk about buffers within the OPEC family. The buffers, where are they at the moment? I mean, the 5-year average, I believe that OPEC's report the other day talked about the 5-year average of inventories being significantly below that. But who has the buffer capacity really to step in if there is an outage, if there is a material risk here in the UAE, as we saw with Abqaiq in Saudi Arabia? Has Saudi got the capacity to step in immediately?
Yes, we do think they have that. And I think right now, remember, OPEC Plus are bringing back, at least on paper, 400,000 barrels per day of production every month through to September. Of course, the reality is closer to half of that, 200 to 250,000 barrels per day, because of just underproduction and underperformance across several countries, not necessarily in the Middle East, but outside of that. So there is still capacity in several of these countries. But over and above that, you know, we do think Saudi Arabia, just bases this deal, goes to 11 million barrels per day on our numbers by the end of the year. So we think they can get there. UAE can do that as well. But again, the problem is inventories, like you mentioned, it's not just below the 5-year average. We're talking about below 5-year minimums. So we are talking about tank bottoms, right? Like, look at what's going on at Cushing. So there's no stock level to really draw on. And if you really think Saudi Arabia producing at 11, UAE surging closer to 5 million barrels per day, it doesn't leave the market with any buffer. And I think that's the problem we have. See, like I said, in our balances, we've already got them going there. So then if Libya goes offline, for instance, we don't really have anything else.
Yeah, I love how you phrase this in your research, Amrita, that the market is asking, are there any shock absorbers left? If we do turn our attention to Europe, you have Goldman sort of gaming out the possible scenario with the tensions between Russia and Ukraine, saying that if there is action, it would spark sanctions on Nord Stream 2. That would curtail flows into Europe, and that would mean record gas prices. Is this a scenario you see unfolding as well, again, on that record gas price scenario?
I mean, look, for us, we've been bullish on European gas prices for some time. Even our latest note, we've said, if anything, the latest correction downwards has been a bit too much because we think, the fundamentals remain very strong. Gas inventories, there's still a risk late winter we could get to, again, record low levels. For us, the Russia-Ukraine situation, again, of course, heightened tensions, but we don't necessarily see sanctions coming because of the impact it's going to have on European energy markets. But the underlying problem for European gas markets remain that Russian supplies aren't really coming, Nord Stream 2 or otherwise. So we absolutely see a very strong market this year.
So I'm going to put yourself and Halima Croft head-to-head. Why not? It used to be in the days when we were at OPEC, we were all in the same city at the one time. Halima says the risk of Russia invading Ukraine at over 50%. What's your percentage, Ms. Sen?
We think it's actually less than that. I mean, look, we're not saying, you can never say never, right? But in general, there is a lot of back and forth going on. I mean, there's still diplomatic talks going on. Not saying that's really led to any lowering of tensions. However, we do think this is definitely a political move on the part of Putin to kind of send some messages rather than being prepared to invade straight away. So we absolutely don't think the probability is that high. Having said that, the chances of miscalculation on either part, right? That is the tricky bit, which is always the case with situations like this. And I think, of course, that can have significant ramifications, but that's not our base case.
Amrita, can I get to what your base case, though, is in terms of prices? Where do you expect natural gas to go to this year?
I mean, we've got natural gas averaging, like European gas, we're looking at it in euros per megawatt hours, around 80 euros per megawatt hours, which again, yes, it's off the peak. We had a spike last year of 160 for a few days. Of course, it's less than the peak, but it would be an annual average record. So we are looking at record gas prices in Europe. And again, for oil, very similarly, not record prices because we've had much higher prices before, but about $90 oil prices this year.